Well, buying an RV or buying a car, it's very exciting. And the excitement, the emotions, and all the fun things that come with it, there's also another side of it, the responsibility side, the money side, and you have to talk about it. And in this video, I want to talk about the different financing differences between purchasing an RV versus a car, because there's pretty big differences financially, especially with regards to financing, and a few other things we'll touch on. Now, I would say that probably 90% of people who purchase a car or an RV finance it. They get a loan on it, whether through the local dealership that they're buying from. Most do. Some will go to a credit union and get a loan there and then just use that check to pay for it. Some may even take a 401k loan. But 90% of people, however they do it, will finance it. Less than 10% will probably pay cash for their vehicle. So just make a note. But let's talk about the first major difference, guys, okay, between financing an RV versus a car, okay? And that is the length of the loan. For an RV that has a motorhome, whether a van conversion, a Class C, or like a Class A bus motorhomes can finance all the way up to 20 years versus a car, the longest I've seen is 7 years. And a lot of them only go up to 5 years, okay? Now, some of this will depend on your credit and your down payment, but this is pretty much max, okay? The max amount of length that you can take a loan. So why would you want to go max length? To lower your payment, okay? Because most people, 90% of people, buy a car or RV on a loan. And other than a house and other than having a child, buying an RV and a car will be your biggest expense in your lifetime. And that's why you should take it serious. Now, also make a note, if you're going to buy a travel trailer, meaning that you're buying an RV that doesn't have a motor, usually the longest they'll finance that is 12 to maybe 15 years. So the motorhomes, they finance it a little bit more. And my thought process is, I'm not 100% sure, but because they have a motor, they're also could be used to drive. They're a little bit more valuable. But either way, that's how the banks do it. So that's the biggest deal. Because again, the reason that the longer length matters if you buy an RV, because it's a lower payment, okay? Because if you're going to finance, let's say like a Class B van, that's a $100,000 van, and they go up way past that, for 20 years and put 10 or 20% down, that's what most RV dealerships want, then your payment could be $700 or lower, okay, for a $100,000 car. Versus if you're going to buy a $70,000 pickup truck, you may have to finance it for just 7 years, and depending how much you put down, your payment would be $1,100 per month. So, that lower payment affects a big percentage of your monthly payment as far as what you can afford, and that's what most people do. So let's go into the next thing, okay, because there's if 90% of people finance a car or RV, then that means outside of the length of the loan, what also factors into their affordability is the interest rate. And the interest rate on an RV is most likely going to be a little bit higher than a car. It's a little bit more of a riskier asset, because a car, for most people, definitely their primary car, they're going to hold on to it a little bit longer, and the max loan is 7 years. So the bank kind of figures, well, most people, their house and their car are their last thing that they would foreclose on or repo on. And if it's only a 7-year risk, banks say it's not as risky as an RV, because for most people who buy an RV, they have a house and a car, okay? And so the RV is really a toy. It's a luxury. and they're risking 20 years. This is the bank that's giving you the loan. And so the interest rate has to be higher to adjust for those risk factors. Okay, so that's something that you have to consider because banks consider it, and that affects your affordability. Let's go into the final thing. Click the thumbs up if you appreciate this video. I appreciate you. So the final thing, which could help you a little bit, is that the write-off. There's a great tax write-off for RVs, depending on how they are. Usually they need to have water, a bed, and a kitchen, fully self-contained. For the most part, there's an exception in the IRS manual or whatever for your taxes. So for most RVs, it's considered a secondary home, okay? Depending on your situation, you'll have to do the research. And so you can write it off. The interest on the loan you can write off, and the depreciation if you used it for some type of business purpose. So it has great tax write-off value. But remember, it's about net. Life financially is about net worth and positive cash flow, okay? Because an RV and a car depreciate in value. So a tax write-off is not worth heavily negatively affecting your net worth and cash flow. So the tax write-off is just a benefit, but it isn't better than having good net worth and good cash flow. Remember that. But you can get a great amount of benefits from the tax write-off with the RV because it's treated like a second home, because you can depreciate it if you use it for some videos. That's why a lot of YouTubers who do the RV life and they switch RVs, a lot of it is just they switch it, especially by the end of the year, for the tax write-off and depreciation. Now, the car could also be a level of depreciated if you're using it for a business, but you really cannot deduct the interest like you do a second home for an RV. Again, if the car is fully used or 90% used for business, then there may be some exception, but it's not going to have the same amount of benefits as the RV. So those would be some major pros and cons. Do your own research. This is general information. Your situation is different. This is not advice. This is just for general insight, and you'll have to figure it out. But as you do the research, you'll figure for the most part, for most people's situation, this information is true overall. So this is what I've learned in my past several years of looking into cars and RVs and financing them and buying them and paying them off and having loans on them and all those things, right? So, it's just part of life. It's a major expense, but it could be a major joy because a car and RV are very fun, but they can become a big burden. And most people trade in their cars every 3 years, and most people don't keep an RV more than 5 years. They trade the same thing. So it could really negatively affect your net worth down the road. So you have to take some consideration into it. But ultimately, you enjoy the fruits of your labor. This is just some general information. Again, if you haven't already subscribed to the channel, please subscribe. Click the thumbs up, share the video, and I thank you for watching.